Financial markets want you to think that chart reading is complicated, like sacred geometry, Fibonacci retracements, head and shoulders patterns that require a degree in technical analysis. But it's largely nonsense. My name's Dave Huggett, I'm a currency expert, and I've been reading currency charts for 15 years. And today, I'm going to show you the simpler side of it. By the end of this video, you will understand trend analysis better than most brokers who are trying to impress you with complexity. No mysticism, just structure. But before we dive in, let's establish why this matters for your business if you're trading internationally and are exposed to foreign currencies. You don't need to become a trader, and you don't need to be able to predict exact turning points. You just need to understand the context. When a broker calls you and says the market's moved 200 pips, you need to trade now. You just need to be able to assess whether that's meaningful or just noise. When you're planning a forward strategy and trying to decide on timing, you need to understand where the market's been and where it's trading within the current trading range. And charts give you this context. They show you the structure, the boundaries, and the realistic parameters of what's achievable and what's not. And that's all you need. At any point, a market can only do one of three things. It can go up, it can go down, or it can go sideways. That's it. There's no fourth option, and that applies to any time frame. And most of the time, you can see what it's doing just by looking at the chart. Let me show you. If you pull up a sterling dollar chart over the last 3 months, you'll see it's either trending upwards, downwards, or moving sideways in a trading range. Trending up means higher highs, higher lows. Essentially, the market's grinding higher over time. Conversely, a downtrend means lower highs and lower lows. So overall, moving downwards. Sideways just means it's bouncing between a low and a high, what we would call range bound. 90% of chart analysis, especially in relation to corporate foreign exchange, is just deciding which of these three trends the market is in right now. The second concept to understand is support and resistance. Support is the level where the market finds repeated buying interest. Resistance is where the market finds selling pressure and so struggles to break above it. These aren't magic signals. They're just observational patterns of behavior. If sterling dollar, as an example, has bounced off 125 2 or 3 times over the last couple of months, then that can be seen as support. The market's just showing you that that level matters, and it might take a bit more than the current economic backdrop to bring it lower. Equally, if it's failed to break above 128 as an example, again 3 or 4 times, that's resistance. And that level matters too. But why does this matter for your business? Because if you're looking to execute a currency trade and the market's sitting at 125 or our support, you know that there's a possibility that it might well bounce higher from there. Again, if it's struggling at 128, you know that the chances of it pushing through are likely to be lower in the short term. None of this is telling you what's going to happen. It's just telling you what's realistic right now. And here's where most people go wrong. They look at one time frame and think that's the whole picture, but it's not. A market can be trending downwards on a daily chart, but sideways on a weekly chart. So for foreign exchange in relation to your business, you need to look closely at the time frame that matches the horizon of the transaction you're facing. If you're looking at hedging quarterly exposure, for example, then the weekly or even the monthly is probably more relevant than the noise of a daily chart. But if you're executing a spot trade this week, a daily or even a 4-hourly might be worth a look. Most businesses make the mistake of reacting to short-term moves when their actual exposure is medium or longer term. And the charts help you with this. You just need to look at the right time frame. Let me be very clear about what you don't need. You don't really need to get into Fibonacci levels or Elliott wave theory, as these are tools for traders that are trying to time exact entry points that often exist on leveraged positions. You're not a trader, you're a business that's exposed to foreign exchange markets. So all you need is this. 1, what's the trend doing? Is it up, down, or sideways? 2, where's the support and where's the resistance? And what are the realistic boundaries? And number 3, which time frame matches my exposure? That's it. If a broker starts talking to you about stochastics or oscillators or Ichimoku clouds, then they're either just showing off or they don't understand what you actually need. So how do we use this knowledge practically? Well, let's say you've got a US dollar exposure coming up in the next 6 weeks, and you need to buy $500,000 selling sterling. You pull up a sterling dollar daily or weekly chart, and you see the market's been trading a range between 125 and 130 for the last 2 months. And it's currently somewhere in the middle of that. Therefore, that tells you if the market drops towards 125, then that's the lower end of the range. But if it pushes up towards 130, then that's the upper end. So you might wait or execute in stages. But what if it breaks out of those levels? Well, if it breaches 125 to the downside or up above 130 to the upside, then we could be looking at new trading ranges, which may be the structure of the market changing. But rarely does this come without forewarning or without eyes on the fundamental situation in the economy itself. Again, all of these can be monitored and tracked. It's not about predictions, it's about creating context, and that just helps you make better decisions. Next time, I'm going to walk through fundamental data and what actually moves currencies. Interest rates, GDP, unemployment, why these matter, and what's just noise. If you're a business exposed to international markets and require some help with foreign exchange strategy, just hit the link in the description and book a call. Otherwise, if this has been useful, please hit like, please subscribe, and thanks for watching.